And all I can say is, wow. I mean, talk about a crazy week last week, right? We had the tariffs come out, the markets freaked out, rates hit their lowest level in 5 to 6 months. I mean, absolutely crazy last week. And now coming at us this week, which we're going to talk about, is inflation. Inflation is once again here. We also have treasury auctions. What's the appetite for US debt? And the other thing, we're going to get a very slight glimpse of what the consumer is thinking. And then we're going to wrap it all up with, we are in a buyer's market. I don't care really where you are across the country right now. It looks like we are in a buyer's market. We're seeing a huge increase in inventories. We're seeing the lowest rates that we've seen in 5 to 6 months. But my biggest question is the buyer ready? My name is Kevin Weidmark. Welcome to the Mortgage Mouth, where every week I like to come to you on Mondays with a little bit longer format. I like to discuss what happened this past week, what we can anticipate for this week, and I'm going to dive into the topic of we're in a buyer's market. Also, feel free to jump over to YouTube. Would love a subscription. Every day I drop the daily dose. It's a quick 2 minutes of what happened in the marketplace. Also, you're going to see a lot more future content on just things surrounding the real estate and mortgage industry. So let's just dive right in. Last week, the biggest thing we saw was the implementation of tariffs, right? The reciprocal tariffs came out. Trump came out with his big easel board. I mean, it was fascinating, really. And not have I ever seen, I've been doing this now for over 20 years, not have I ever seen where an administration directly creates that much carnage. I want to say I read in the marketplace, $6 trillion was lost. I mean, massive sell-offs in the Dow. And do I think that's going to continue this week? I do. I really think that you're going to see a lot more carnage this week as the tariff battle potentially heats up. You got to understand, not every country, especially some of the big ones, and in particular, my biggest concern is China, is not going to just fall in line. They are going to want to act like they won something. And I think Trump's going to put his foot on their throat. So I think that's something to look out for. However, I also think that we're going to get some countries that just say, okay, mercy. We've had a big advantage. We understand where you're coming from a economic standpoint. And I think you're going to see a lot more negotiations happen. The other thing that we saw last week is that the labor market is appearing to be stable. Non-farm payrolls come out much better than anticipated. JOLTS was good, initial jobless claims. So if you have a stable economy right now, which everyone was thinking with all the government layoffs and with these tariffs that we would see a huge slowdown, we have not seen that materialize yet. Now, I give a big yet because who knows what's going to come. Do I think there's going to be some slowdown? I absolutely do. Do I think it's at the carnage pace that traders are pulling money out of the market and saying, sell, sell, sell? I don't. I think you're still going to see the consumer, as concerned as they may be, they still love to spend money. It's just what we do as Americans. I don't know how to describe it. I don't know if it's something that has really come to fruition in the last probably 20 years, but we just love to spend money. So I think that's going to continue with a slight decline. The other thing is, once again, the Fed is influencing themselves into politics. Look, the Fed was basically brought about to balance the labor market and to keep inflation low. The Fed had 2 years with their policies once they started increasing the Fed funds rate to curb inflation, which they created and ran up to 9%. And if you recall at that time, Chairman Powell was calling that transitionary. Now he comes out this past Friday and says, oh yeah, we expect there to be higher inflation. I mean, why say anything? You're not going to do anything with the Fed funds policy. Focus on the valuation of our currency. Make sure there's stabilization of the dollar. That should be your focus. Saying that you think, the current policies are going to transition into inflationary higher measures, I think that's kind of obvious. Traders have been telling us that now for over a month, and you were saying that everything was stable. You always seem to be behind the curve. So my big thing is, unfortunately on Friday, Fed Chairman Powell said that, and I think what happened was you had a sell-off. We had rates much lower on Friday, probably about an eighth to a quarter point, than we closed on Friday, all because of his comments, in my opinion. So what do we have this coming week? Inflation's back in the spotlight. And with the added concern of tariffs and the rhetoric I heard all over the weekend that inflation, I think what you're going to see is a couple things. I think it's coming out of the gate. We're going to continue to see a sell-off in the market. Traders are trying to figure out where they can put money that is a safe bet. And pulling money out of the market is a safe bet right now because if you have a slowing economy, you have this tariff war game, who knows how it's going to play out? So let's pull money on the sidelines. However, I think this week until we get to Thursday and we get that CPI reading, I think inflationary concerns actually bubble a little bit. I think they bubble a little bit, and I think we may see a sell-off in the treasuries. I think that we hit a low. I think there was a floor. I think the floor got tested at 4% over the weekend. And I don't know if the market's clearly ready for that given the high inflationary environment that we might be in. So it's something I definitely caution. And once again, I say to everybody, make sure you lock those lows. The other thing that we're going to get, like I mentioned earlier, was we're going to get a glimpse into the consumer. We got Michigan consumer sentiment. It's not a big one from the consumer side. It's not, it's not as sexy as consumer confidence. But what it does, because it only actually surveys 500 people. I mean, shit, I could probably go, this week talk to 500 people on the streets. I mean, it'd be pretty easy to do. So it's not a big survey, but it gives kind of an outlook of now and into the future. But I think traders are really going to pay attention to it because remember, right? I mean, 2/3 of GDP is due to consumer spending, right? I mean, it's based on the consumer spending money. So if the consumer, once again, is just pulling back. Now, once again, we've seen it before. We saw 9% inflation and everyone kept throwing money all over the place during the past administration. So what's to think that that's really going to curb consumer spending? The big thing is if we see a really huge impact in prices. If prices really escalate, look, it's basic economics. You got $100, all those costs of goods now, we're costing you 60, now they're costing 80. You got $20 less of discretionary money to spend. So it's one of those things. So it's going to be really interesting to watch the pricing side of things. And what we've seen these past couple of weeks is we've seen actually manufacturing pricing go up a little bit. So something we want to keep our eye on. And then again, I mentioned auctions are this week. And, we got the 30 and the 10-year, and it's really going to show, look, we understand that consumer confidence is slipping. What is the investor feeling? That's really what auctions are. How are investors around the globe and domestically, what are they thinking about U.S. debt? Is it a good investment right now? And I'm going to say that I think those are going to do well. As much as no one likes what the current administration is doing, the one thing that they are going to achieve is a reduction in our federal deficit. And if you reduce the federal deficit, the ability of the U.S. to pay back debt, hey man, pay me. You're going to pay me. I know you're going to pay me. Here's my money and pay me. So I actually think that they're going to do well. It'll be interesting to see next month where they pan out. I think once these tariffs have really filtered through, we're not even a week in on this reciprocal shit. I think it's going to be interesting to see where that plays out. I think this month we're going to do fine. I think this month will be fine. And then make no mistake about it, we really have transitioned back to a buyer's market. For a while there, we seem to be kind of in between. And I think, wherever you were in the country, and again, real estate is hyper local. So you may argue with me, look, we're still in a seller's market. I get it. You got low inventory. You're in a really specialized zip code, block, school system. I got it. But overall, the temperature is one that you are seeing increased inventory. Spring season, everyone likes to get outside. I mean, even down south, this is when it is a great season for everybody. It's not too damn hot. You're coming out of the thaw in the Northeast, the Midwest, the Northwest. Everybody's on the upbeat. And what you're really seeing across the board is a huge spike in inventory. And what does that typically mean? It typically means right now, because We didn't have all this inventory. You're moving over into a buyer's market, and couple that with low interest rates, you are for sure, which I already said were 5 to 6 month lows. You're absolutely in a buyer's market. Increased inventory, low, I'm going to negotiate. And what a buyer's market really does, shifts the power back to the buyer. Now, it doesn't mean that you're not going to get the value of what you're looking for if you're selling your house. So please, I don't want you to think that at all. But you got to make sure you got your shit in order. Place needs to be clean. I would get an inspector out there. I would really know the value. I would get with a professional. Get a competitive market analysis. Know what other things have sold for in your neighborhood. Know the condition they've been in. Maybe go look at some open houses, right? Because you're moving over into that. So it's going to be extremely competitive from a standpoint of trying to sell your house. It gives a buyer more negotiating power on price, repairs, inspections, a numerous amount of things, right? The big caveat is the buyer ready? Right? Since the current administration came in, there's been a lot of talk of just uncertainty. The uncertainty has been, whether you want to call it self-induced from the administration, layoffs, Doge, cutting out, entire government agencies, so on and so forth. That created angst. And now you have tariffs. So all you see in the media is, whoa, whoa, whoa. So it's going to be very interesting to see if the increased inventory, because now I got a ton more selection and I now have a lower mortgage payment. My purchasing power just went up, or that house I really like is going to cost me less. Will that override the quicksand that typically happens when we have massive uncertainty? And I would say right now we are at a massive uncertainty scale, just overall temperature. So, few things that I think we can do as professionals is really educate and reassure our buyers that now is the right time. Clear, data-backed insights, showing them the benefit of these lower rates, sharing with them the increased purchasing power, talking to them how previously, whether it had been the pandemic or whether it was the housing crash, how people maneuvered during those times, came out on the positive side and did extremely well. Above all, encourage that pre-approval. You want to make sure that they know their numbers, that they, let a mortgage professional talk to them about their increased purchasing power. Let them talk about even the potential of lower interest rates, moving into the 5% range. Get them pre-approved so that they feel much more comfortable in the fact that, I can afford that payment. I'm happy. Everything's great. Fits within my budget. Let's now go find that house. Last time I didn't see that house come up. Yeah, it didn't come up because now we're in a buyer's market. We have more negotiating power. We should go see it. Things like that. And lastly, just showcase opportunities. Clearly illustrate the savings over time with these lower interest rates. Clearly illustrate, like I just mentioned, how during those times of unrest, people that actually bought homes, people that actually invested, came out smelling like roses. So opportunity, being willing to take advantage of opportunities when there is a lot of uncertainty. That's when people really do well, especially given the environment of lower interest rates. All right, y'all, I hope that was really beneficial. I hope you have a kick-ass week out there. You need anything, flyer, pre-approval. You want to talk, whatever the case may be, you want to grab a cup of coffee, you're down here in Austin, Texas. It is gorgeous this week. I am more than in and would love to have a conversation with you. And if you're grabbing this off of YouTube, thank you so much. Make sure you give that subscription to The Mortgage Mouth on YouTube, giving you a ton of information. And if you want to have a conversation about your particular situation, I lend in all 50 states and would love the opportunity to at least engage in a quality, constructive, and educational conversation to learn about your goals and how best to attack those. All right, y'all, have a great week, and I will talk to you later today with the Daily Dose and every day this week with the Daily Dose. Have a great one. Cheers.